hope you are doing well, and I hope you have had a good Forex holiday up to this moment. This video is the second episode in our analysis series. In it, we will update global gold, the ounce, and see how much of last week's discussion played out and what view we can consider for the market this week. Today is September 28, 2025, and the global market opens tomorrow, so I wanted to give an update beforehand to understand where our analysis stands. First, let us return to last week's observations. Last week I said that on the 4-hour time frame we had a flat Kijun line where the market could drop to, and we can see that price nearly reached within about $7 of it. Did not quite activate it, and then began moving upward. Now let us go to the daily time frame for this week and see what we can have. At first glance, over these last 4 candles we are seeing weakness in the trend. In these 4 recent candles we see a loss of momentum, which can serve as a warning to us as traders. Since we have the Non-Farm Payrolls report on Friday this week, we may continue our correction to lower levels before Friday, and then move up after the report if we reach a solid and credible support zone. So on the daily time frame, we observe trend weakness, but we cannot pursue selling because the dominant side of the market is still the buy side. Let us enter the 4-hour time frame. Let us see what the market has built for us and what it has not. All right. On the 4-hour view, we can see that price reached the Kijun line, and the market's move to the upside began. Yes, it moved up quite nicely. What is very important is that on the 4-hour time frame, we have not managed to make a higher high than this previous high I am highlighting. Our previous high on the 4-hour time frame is approximately $3,785, and it has not been broken. Also, after touching it, we do not have a bearish engulfing candle. Therefore, to say we are likely to see another rally on the 4-hour time frame, a valid break of this line is very important for us. We cannot be indifferent to it. Note that we pulled back to the Kijun line and even to the last high that was broken, but taking out that high has been unsuccessful. Let us turn on the Ichimoku Kijun line. Let us see what Ichimoku tells us. The first thing it says is that we have built a kind of partial Ichimoku support here. That means a break here matters. If it does not break, price can move up again, especially since we are at the midline of the channel, and the trend line we are seeing, although our trend line is not very clean, has been broken. We can treat this as a pullback. Now we come to the 1-hour time frame. Let us see what the 1-hour time frame is telling us. You can see that on the 1-hour time frame, we can now draw this broken trend line more accurately, placing it better and giving it more weight. Let us see what this trend line tells us. We can consider a drop toward the base that caused the trendline break as a pullback. That is, we say we expect that since the market has broken the trendline and the prior leg is bullish, with that bullish leg starting from the 4-hour zone that was broken, our backdrop is bullish. If the market reaches this area, this level, and gives pullback confirmation, remember this is on the 1-hour time frame. If it comes into this area and confirms continuation upward, we can buy for the next rally toward around 3,823. However, I personally cannot view this market drop as a clean pullback, because the slope of the decline is steep, and price is moving down quickly. Perhaps it was near the open and the market maker wanted to disrupt next week's outlook, or perhaps there will simply be no pullback. Still, our first buy zone and the first classical confirmation area on global gold is this zone we are seeing. We can consider it a pullback area. If price reaches it and confirms, we buy. But the second area, here we can see a trend line. Although it is a weak one, but we do see a trend line. So what is our second point? We can say that because the channel is upward, we can regard this as a channel. And it is easy to frame it as a channel, though the trend line reads better. We say because we have this trend line, and after each touch we made a higher high, we can consider our next buy zone around this trend line, looking for higher levels. So right now on the 1-hour time frame we have two buy zones. The first zone is our yellow box, viewed as a pullback plus the broken trend line. Our second zone can be this trend line that has been touched twice, and both times a higher high has been recorded. In general terms, if we want to speak broadly, whenever we are above these two 4-hour zones, the market trend is bullish, and we are targeting higher prices. When these two levels are lost, we can expect a correction down toward around 3,620. Although we might range all week into the Non-Farm Payrolls report, and then the market may react, whether the report is positive or negative. But let us not forget, a news release does not create a change in the primary trend, it merely creates volatility, and that is all. Therefore, if the market drops on the Non-Farm Payrolls report, we should be pleased because it is creating a new buying zone. But for now, for the coming week, our buy zones on the 1-hour time frame are the yellow pullback box and the trend line. And if the decline continues, the last platform for buyers willing to take the risk to buy would be between our two green lines and our black line, our rising channel. Other than these, for now, we cannot consider lower buy zones. So do not forget, keep control of your trades this week. We have very important news ahead, and important fundamental factors as well. Do not take unnecessary risks in the market. Do not rush. For all these areas, you must seek clear buy confirmation. Buy confirmation is very important. On Ichimoku, we still do not see the creation of a sell trend. Across all our time frames, it is still supporting price, so I do not give a high probability to a very deep correction. However, markets are always about probabilities. Therefore, for any of these points where we buy, whether the yellow pullback box on the 1-hour trend, the 4-hour channel low, or the 4-hour bases, we must have a stop loss because the range of this market has expanded greatly, and the risk to your capital may be higher than before. Thank you very much for being with us in this video and for allowing me to present another analysis. I hope the coming week is a profitable one for you, free from any stop losses being hit or margin calls. And if you enjoyed the video, do not forget to like and subscribe.